Hello guys, this is Oz. Welcome to Oz SMC. Today we will be talking about smart money. What is smart money concept? How it works, how it applies in the market. All of that we will be going through. But this will be my first video on a series of smart money concept terminologies that we will be going through. And today we will talk about liquidity. Why do we need smart money concept? Why do we have to learn this important concept? Because the market movements here are all done by the institutions and the banks, which we can basically say that there's a man behind all of this. Let's call him a composite man. We can call him a composite man, but it is a kind of entity made up of like huge institutions, banks, hedge funds, small companies and big companies, and people with billions and billions of dollars. They move the market, and that is why we do study, because they left footprints in the market. And if we can learn and decipher those things, then we would know when and how we can involved in the market, anywhere in the market. So if you're new to my channel, hit a like and subscribe, and also click on that notification bell so that when my next video comes up, you will be notified. And again, if you are new to trading, if you don't have a basic knowledge, I would suggest that you go back, study, or either in the YouTube, you can look up, you can study all how the retail concept works, the moving averages, the indicators, and all of that. Because once you know all of that, here we will be, what do you say, we won't be using any of that, but you do need the idea of those, how it works. Because the banks, the institutions, what they do is they manipulate those retail traders, their concept. They know how exactly how most of the traders, 90% of the traders work. So they will be betting, they will be trading against you. So we need to be on side of the institutions who controls the market. So that is why you need to learn all of those, because here I won't be discussing any of that, and we will be only, like the name just here, SMC, smart money concept. We will be only dealing with the, those smart money concept terms. So this is a live market right now. Euro USD, you can see tomorrow is NFP, so market is crazy now. This is a 4-hour chart right here. Sorry, this is the 4-hour chart right here. Okay, so let me talk about, today we will be talking about liquidity. So this is what we will be thinking about, liquidity. So what is liquidity? So what is liquidity? Liquidity is nothing but the orders in the market, where the orders lie in the market. So how does market is formed? Because orders, buy orders, sell orders, stop loss orders, buy stops, sell stops. Wherever you're buying and selling, those are orders. Hence, liquidity is everywhere in the market. It is below the a high of this, below lows of this, above high of this, all here, this are liquidity. But knowing that our target here is to decipher how to use this liquidity to our advantage, so that once we have a bias market where it might be going, Liquidity can help us to identify the areas where price may target in terms of your take profit or your stop losses. This is a very important factor that will come to play in your trading career, especially if you want to involved in smart money. And I'm telling you, once you get involved in this, the reward is endless. It's not just about you being profited or somebody being lost, but understanding how the market moves, understanding the movement of the price. That's what it matters here. So let me just give you a quick example here. What do you see here? Some kind of a trend line here. Again, we won't be using any of those concepts. No trend line, nothing. Okay, let me just move this to another chart. Okay, great. I don't have any marks here. So here you see there is a trend line here, maybe from here, whatever, and people would be, buying or selling here. Okay, it's coming back to the trend line, and if we put up some moving averages, if it lines up, coincides with this, all right, I'm gonna sell this, we're gonna sell this, we're gonna sell this. It may be they would have got huge profit here, or maybe somebody sell here on this trend line and then got stop outs right away. So why is this here? Why the market moves in this way? How is this possible? These are being engineered by the composite man, by the institutions, by the big banks. They will move the market in such a way that we retail traders would want to involved in it. See, in terms of maybe a channel, a trend line, a breakout, support and resistances, wets, inverted, or head and shoulder patterns, all of those. I don't know all of it, and it's not important because we are not going to use any single of it. In fact, we are not even going to use candlestick patterns. None of those are important. Why? Do you think that institution will sell here because there's what is this? A bearish engulfing, and you think they would maybe buy here somewhere because there is a hammer? No, they are making this move. In this move, they made it look like an hammer. They made an bearish engulfing here so that we, the retail traders, if we can combine with somehow, okay, let's find the support and resistance area. So what is this? In the eyes of the retail, this is a very nice resistance. This is a very nice support. Some may be selling here, buying here, selling here, 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 here. And then what happened? Boom, we had a breakout. And then this breakout turns out to be a fake breakout, and we will call it, okay, this is a fake breakout, and then we'll sell. And then we give a breakout here on the support. All right, let's sell. And even on the retails will sell, even on the retails here will buy. And what happens? Boom. What happens? Boom, it's going up. It's being manipulated here. Why they needed this move? Why they needed this move? Because see, how many people have been selling here and buying in these areas? Stop loss here, stop loss here, 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 stop loss here, 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 and there will be orders of buy stops above this also for people who wanna catch the break of this consolidation. So there are so many orders here in form of buy stops and stop losses, here in form of sell stops and stop losses. So they have been consolidating this because they are waiting for enough orders to break this out, to manipulate them and then move the market. So their intention here was to move this price higher, but what they did, they made a fake move here. So what they took out here, all the stop losses of those sellers of this resistance, at the same time activating the buy stops and then taking out everything. They did the same thing here, take out all the stop losses and activating the sell stop and then taking out again. So this is where liquidity comes in. If you knew that instead of this being as a resistance or support, if you knew that these are liquidity points where banks, the institutions, the composite man will manipulate at one point. So that's how you understand the terms of liquidity. And in my next videos I will be talking about imbalances, inefficiencies, and then we'll deal with Wyckoff and then our entry criteria and all of that will come. But first thing first, go again, rewatch this video, try to understand the concept of liquidity. What is liquidity? It's nothing but where the market, where the orders lie in the market. Price will move from liquidity to liquidity. That's it. Here is liquidity above this, above this, above this. I mentioned earlier, every high, every lows, there are liquidities. Why? You now understand. There's a concept. Even here, if you just put this in the form of like this, what do you see? Liquidity, 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 here, 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 fake breakout, and then boom. So the why above highs, above lows, there are liquidities, even in the form of a channel, and even you see this small resistance here, the trend line here. Liquidities, liquidities, people will be buying here, so there are stop losses, and then boom. So we need to understand liquidity. Once you have a clear understanding of this liquidity, then we will combine it with our other factors that we will be dealing in the coming videos, so stay tuned for that. And yeah, just before I sign this out, let me just give you some more examples. See, what do you see? Most of the traders, they will be drawing this. I bet you they will be drawing this channel. And then what do? Some will buy here, some will buy here, some will sell here, buy here, hence creating liquidities here, 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 here. And when they made this breakout, and yeah, don't get me wrong, the way that we trade as in the retail way, it's not that it's not going to work. It will, provided you have an edge, provided you have a system, provided you have a rule. If you have your rule and if you follow it, if your ads play out, then that may be a profitable trade. And that's fine. I do not I'm not talking shit about retail traders using indicators and all this manner. No, please go ahead, do it. If that's your way, if that's how you want to do it, that's fine, please go ahead. But if you want to deal at the highest level, if you want to know what the banks, what the institutions had for breakfast, what time do they sleep, how is their vowel how is their vowel movement, all of those, if you want to go super deep inside their head, what they're thinking, what will be their move, this is the place to start. If you don't understand this, feel free to leave a comment below. I will maybe make another video with detailed example, because this is just a start, and we'll cover more as we go along. And also you can drop the terms your the things that you want me to create videos on, only on smart money. I won't be dealing with any other you know ways outside of smart money that you can learn from other videos, other channels, but here we'll be dealing with this. So next time we will be dealing with let's do imbalance next time. Okay, so imbalance, and then we'll deal with inefficiencies, mitigation, order blocks, how to refine order blocks, and then supply and demand zone structures, Wyckoff, all of those fun stuff we will be doing. And yeah, whatever that I'm doing here, whatever that I'm teaching here, this is not my uh, discovery, this is not my knowledge. I learned from my mentor. His name is Anton, and whatever that I do, all credit goes to him. So just one more before I sign out, just so you can understand. This right here is just fulfilling imbalances. You're just gonna love when we get into imbalance. You're just gonna understand the movement and why, how, the way it moves. You will be literally able to predict the market. That means it's not that you're gonna be perfect, you're gonna get it right all the time. No, but you will be able to understand, you will be able to create a bias of where the market might go and why. Regardless of the news, of the events, we do not deal with news and events. We won't be dealing with that here, because this move, all of this, just so a daily chart, maybe this move was created by a news event, but whether there was no new events or not, whatever, maybe this was NFP or whatever the case, this move was bound to happen. This move was bound to happen. Why? There are liquidities, all that has been created, and they need to come and grab all of these liquidities. They need to come and fill the imbalances here, the inefficiencies here. They need to come and mitigate the order block here, and from where they're falling, from this order block they're falling, they're selling off again. So this we're gonna go deep. I'm telling you, once you get into stuff, literally your trade is gonna improve tremendous in a way that you have never imagined before. Maybe you have heard people earning uh, what 500 pips, 600 pips. Forget about those. We won't be dealing with those. Rather, we will be focusing on our RR, risk ratio. So this is what we are talking about. Suppose on this trade you took right here, maybe if this was your stop loss and this was your target, this is just 1:2 RR. So that's how most of the retails will be doing. But for us, with all the things that we will be covering, maybe we will be able to take a trade like this, and it becomes 7 RR. And I'm telling you, 710, these are just your normal trade on any given trade, and there will be trades that go 200, 300 RR and all that. Those you don't need to believe me. As long as you stay and follow and continue to see this, I will show you those. And if I come across any of those threads for me, I will post it for you. I will analyze, I will do a top down on it. And alright guys, for now we'll be signing off. This is just a rough introduction on liquidity. So just let me know in the comment if you want me to check other things and want me to do a top-down analysis on any given pair. I will be doing here for a swing trade, and that will come as a side video, but my videos will be coming out on a series of those things that I have mentioned earlier. Alright guys, you have a good time.